What is up, traders? I hope every one of you is doing fine today. Today I will be talking about a ICT strategy that allows you to trade without a daily bias at all. It's really simple, really mechanical, so stay tuned for it. So the first things we're going to be looking at are the previous day's highs and the previous day's lows. So let's actually get to that first. So this is a strategy that works on the 1 minute. You could also do this on the 5 minute or the 3 minute or the 15 minute even, but I will be showcasing results on the 1 minute right here. So let's actually mark it out. Here we have previous day low, and I always count from midnight. So right here we have our previous day's high. So those are the two levels we are going to be mainly watching. Now, the second thing we want to see is us breaking those levels and then see a clear market structure shift. And then there's a third confluence, and I will get back to these confluences one at a time. Don't worry about it. So as soon as we break it, I want to see a clear market structure shift, and I'm only going to want to be taking entries in the London kill zone or in the New York kill zone. Let me actually list these confluences right here. So these are the rules. We start to break previous day high or the previous day low. We have a clear market structure shift. We then form an FEG, and then our entries will follow between 2 a.m. till 5 a.m. or 7 a.m. till 10 a.m. So let's actually go over an example right here. So as you can see, this is currently the Asian session. So no real trades for us right now. And as you can see, we're approaching that daily low right here. And we actually violate that, and it is now, let's see, 140 almost. So 20 minutes before the London kill zone. As we can see, we have quite a momentum shift right here. So we could consider this as our market structure shift already. But of course, we cannot yet place an entry simply because we are not 2 a.m. yet. We're waiting for that 2 a.m. mark. So this is a lost entry. We did not enter off of this. And now it is 1:59. So we can actually start looking for an entry for the next little candle. So now let's see, what did we mitigate? If we take a closer look, we had this fair value gap right here that was being filled already. Then we had another small fair value gap, which was partially filled already. But there's still a little bit of this gap left. We can actually take trades off of that. Now, to add an additional confluence to this, we didn't just break one swing high right here. And of course, it's a minor swing high, but we also broke this one, which is indicating that the market is really wanting to revert. So what we do now is we basically place our pending order right on this fair value gap right here. We simply cover that low, or you could basically do whatever you like to do. I usually like to cover the low if it's really close to our candle one. What I mean by candle one is the candle right here is going to be 1. Candle 2 is the one where the FEG is actually present. And then candle number 3 is basically the one that confirms the fair value gap, right? I usually like to cover the low, but you could cover the high or the low of candle number 1. And as for your target, you can basically do whatever you like. I always recommend to target the low hanging fruit. So what we could do right here is basically target this high right here. But since we basically have a relatively equal high, so the difference between these highs isn't that much, if we were to sweep liquidity, if we think like smart money, we could easily push up those 3 pips to catch that extra liquidity that's laying there. So let's actually target that as well, which basically offers us a nice 9.5R trade right here. So let's actually see what the market does. We get filled and we have a really, really aggressive move up. So as you can see, we tap into that fair value gap really quickly. We then start to shoot up, and let's actually follow what price is trying to do here. So as you can see, we start to really reject off of that high first, and then we move up once again. Sorry for those alerts. And then boom, we actually get filled. This was 9.5R. And again, let me actually rephrase those rules for you. It's a really simple strategy, and it does have a really profitable win rate. So the first thing we're going to want to see is a break of the previous day high or previous day low. And it doesn't have to be the previous day, it could also be the day before, right? So the break of the previous day high or previous day low. Then we clearly want to see a market structure shift with high momentum, of course. So if we just wick over one of these highs, it wouldn't count. But if we see some strong momentum, some strong displacement, that's what we're going to want to be looking at. Then we're going to enter off of the FEG, but only between 2 a.m. and 5 a.m. for the London session and 7 a.m. to 10 a.m. for the New York session. That is it. I hope you like this strategy. If you do, I would appreciate a little thank you. And you can do that by just simply leaving a like and perhaps a comment. And if you want to see more strategies and content like this in the future, I highly encourage you to subscribe. And if you're interested in joining a like-minded community full of ICT and SMC traders, we have a free Discord up right now. We do giveaways quite often, so feel free to join that. We would love to have you there. All right, thank you for watching. This was the video. Take care, guys. Bye bye.